Welcome back to BitcoinDorks, your daily source for everything related to cryptocurrency markets and news. If you're new here, don't forget to hit that subscribe button and turn on notifications so you never miss an update. Today, we're diving into some significant developments in the world of Bitcoin mining. It's been reported that the Bitcoin mining hash rate just experienced its most significant crash since the China ban. Let's unpack what this means for the crypto market. First off, let's talk about what the hash rate actually is. The hash rate refers to the total computational power of the Bitcoin network, essentially how much computing power is being used to mine new Bitcoin blocks and secure the network. It's a critical metric because it directly impacts the security and efficiency of the Bitcoin network. A higher hash rate means more computational power, which makes the network more secure against potential attacks. Now, on to the big news, the recent crash in Bitcoin mining hash rate. This decline in hash rate is reportedly the most significant drop since China's crackdown on Bitcoin mining earlier this year. China's ban on Bitcoin mining resulted in a mass exodus of miners from the country, leading to a significant decrease in the global hash rate. However, what's surprising is that this recent crash seems to be unrelated to China's ban, indicating that there may be other factors at play. One possible explanation for the decline in hash rate is the recent crackdown on Bitcoin mining operations in other countries, particularly in regions where energy consumption and environmental concerns have come under scrutiny. Governments and regulatory authorities in various countries have been taking a closer look at Bitcoin mining activities, particularly those powered by coal-fired energy sources, due to their environmental impact. This increased regulatory pressure could be prompting miners to shut down or relocate their operations, resulting in a decline in the global hash rate. Another factor that may be contributing to the decline in hash rate is the ongoing transition to more energy-efficient mining methods and hardware. With the growing emphasis on sustainability and environmental responsibility within the crypto community, miners are increasingly looking for ways to reduce their carbon footprint and energy consumption. This shift towards greener mining practices could be resulting in a temporary decrease in hash rate as miners upgrade their equipment and adjust their operations. Market dynamics and economic factors play a significant role in influencing the decline in hash rate. The recent volatility in Bitcoin's price and the broader cryptocurrency market could be exerting pressure on the profitability of mining operations. The cryptocurrency market is notorious for its price fluctuations, with Bitcoin's value sometimes experiencing rapid swings within short periods. Such volatility can significantly impact the revenue generated by miners, as their earnings are directly tied to the price of Bitcoin. During periods of price downturns or extreme volatility, mining operations may become less profitable or even unprofitable, prompting some miners to scale back their activities or temporarily halt operations until market conditions stabilize. Logistical challenges present another contributing factor to the decline in hash rate. The global supply chain disruptions caused by the COVID-19 pandemic have affected various industries, including the cryptocurrency mining sector. Supply shortages of mining equipment, such as ASIC miners and GPUs, have become increasingly common, making it difficult for miners to acquire the necessary hardware to maintain or expand their operations. Additionally, logistical challenges related to shipping and transportation have further exacerbated the situation, leading to delays in the delivery of mining equipment and components. As a result, some miners may be unable to upgrade their equipment or expand their operations, contributing to the overall decline in hash rate. Regulatory developments and geopolitical tensions may also be influencing the decline in hash rate. Regulatory uncertainty surrounding cryptocurrency mining activities in certain jurisdictions can create uncertainty and risk for miners, leading to a reluctance to invest in new equipment or expand operations. Additionally, geopolitical tensions between major mining regions, such as China and the United States, can impact the global distribution of mining hash power. For example, China's crackdown on Bitcoin mining earlier this year resulted in a significant decline in the country's mining hash power, leading to a redistribution of hash power to other regions. However, geopolitical tensions between other major mining regions could potentially disrupt the global distribution of hash power, further contributing to the decline in hash rate. So, what does this mean for the crypto market? Well, a significant drop in Bitcoin mining hash rate could have several implications for the broader cryptocurrency ecosystem. First and foremost, a lower hash rate could potentially make the Bitcoin network more vulnerable to security threats such as 51% attacks, where a single entity or group gains control of the majority of the network's computational power. However, it's important to note that the Bitcoin network remains highly resilient, and any potential security risks are likely to be mitigated by the decentralized nature of the network and the continued support of miners and stakeholders. Furthermore, A decline in mining hash rate could also impact the supply of new Bitcoin entering circulation. With fewer miners actively mining new blocks, the rate of Bitcoin issuance may decrease, potentially leading to a slowdown in the rate of supply growth. This could have implications for Bitcoin's price dynamics, as changes in supply and demand often influence price movements in the cryptocurrency market. In conclusion, the recent crash in Bitcoin mining hash rate is a significant development that underscores the dynamic and evolving nature of the cryptocurrency ecosystem. While the exact reasons for the decline in hash rate may vary, it's clear that there are multiple factors at play, including regulatory pressures, environmental concerns, and market dynamics. However, it's important to view these developments in the broader context of Bitcoin's resilience and the ongoing efforts to build a more sustainable and secure cryptocurrency ecosystem. That's all for today's video. Thanks for watching, and we'll see you in the next video. Stay tuned and stay crypto savvy.